afternoon. Today is Monday, November 24th, the week of Thanksgiving, and hope everyone has a fantastic Thanksgiving. And the one ETF I'm looking at today is GLD, Gold, GLD, okay? I think we've gotten a nice movement up off those lows. Here, let me point this out to you. So we've been trending down for quite a while. Market broke down here, made new lows, and we've been trading up for about 2.5 weeks now. And as you can see, the market's up near that 50 exponential moving average, this hot pink line here. And today looks like we're going to get a tight little inside vertical bar, as you can see right in here. So I'm going to use the high and the low of this inside pattern to my advantage, okay? I'm going to wait, patiently wait for the market, and I'd like to see this tomorrow if possible. If the market's able to take out the low of 114.79 tomorrow, I would look to go short the GLD with an initial catastrophic stop above the high of 115.37. I go to 115.57. So as long as that low is penetrated first to 114.59, 114.59 would be the short with the buy stop at 115.57, okay? And I'd be looking to take this market down to at least 112.5 and change. So again, I'm not risking a whole lot on this trade. So this is what the trade would look like here. All right. So the difference between these two horizontal lines would be the risk. Okay, that's my R. Okay, we're looking to make multiples of the R, and again, R stands for risk. So if you can make 2 to 3 times what your initial catastrophic stop is, then you're printing money, okay? So we want to make multiples of it over a long period of time. So again, our first profit target would be somewhere down right in there. So if you just visually look at this, you can see that if my first profit target is about 112.40, look at the difference between where we would be shorting it and that first profit target. That's 2 to 3 times larger than what this initial stop would be right in here. So again, that's just a trade setup. Big difference between a trade setup and a trigger, okay? A trigger is actually getting in the market. So again, I would need to see the market penetrate down through today's low tomorrow. That would be my trigger to get short. Now remember the IWM that I was talking about last week, the Russell 2000 ETF? As I showed you, the market snapped back beautifully from where we were buying it right in here, 115 and change. We're at 117.5. Close to 118, testing these highs right up in here. I think this market moves even higher. Usually the week of Thanksgiving, the market does rally, so we'll see if that holds true this year. So if I take a look at the Qs, they're on the highs. The DIA ETF, which is the Dow Jones, and then of course you've got the SSO, or the SPY, which is the same thing. The SSO is 2 times an index ETF, and then the SPY is just 1 to 1 on the S&P 500. These are pretty much on the highs, and today is a pretty inactive day. We're going to have an inside pattern. We're going to have lower highs than Friday and higher lows than Friday. So the market's starting to contract in here, and we'll see if we get much of a movement since it is a week of Thanksgiving, and usually I would say by tomorrow afternoon a lot of people will start going away, probably the most heavily traveled week of the entire year, so I would think the volume is going to start getting a lot smaller. So hope that helps. Have a profitable day, and I'll be back with you tomorrow. Bye for now.